Hello everyone, this is Ryan with Numbers Up Finance. Just bringing you a quick market wrap video for Tuesday, March 12th, 2019. Quickly want to cover the weekly charts on SPY, and then after this I'll move over to the daily charts on the futures for the volatility index, and we'll wrap it up super quickly. We'll keep it very brief. I just want to point out a couple things that I see and honestly support the bearish case moving forward to close the week. So let's take a look at the weekly charts for SPY. So if we date back to last week, after we had this 2-month push-up, after we had our December lows, and then we had a 2-month rally of about 20-ish, 25% or so. I'm just kind of eyeballing it. We ended that run with a strong bearish engulfing candle at this super strong 281 resistance level that we identified. Bearish engulfing candles are a very good sign for the bearish case, and what you usually like to follow bearish engulfing candles up with are red candles to solidify the case. As you can see right now, we're not getting that. We are getting a very strong, not impulsive, but pretty strong nonetheless, green candle for the SPY weekly charts, which appears to be foiling our bearish engulfing candle case on the weekly charts. But again, there's still 3 trading days left in the week, so we can see how it plays out. If we go and backtest these bearish engulfing candles on SPY, we can see 2 of them in the recent past. One of which was on the 2018 highs. We had a bearish engulfing candle, fully engulfed the previous week's candle, and then pushed very strong downwards afterward to confirm the case, and we saw a lot of downside after that. And then the second time was in early December of 2018 when we fully engulfed the prior week's candle and then saw another 2 red weeks to follow, very strong red weeks at that. So what's significant about this December case is that this candlestick that followed our first bearish engulfing candle actually started in green territory. You can see that the tail end of its high was much higher than where it closed. So our last bearish engulfing candlestick on the weekly chart had a very similar case to what we're seeing now. That means we can fully expect the week to close red. It's very plausible to see just a long-tailed candlestick, one that maybe makes a high right where we're at right now, and then trails the rest of the week down to close below the previous week candle. I'm going to be watching for that to keep the bearish case alive. However, if the bullish case stays strong, and if we close this week higher than we opened last week, as in above this candle, if the close for this candle is above the prior week's candle, then I will definitely watch to perhaps, reconsider the long-term bearish case. But that being said, we've seen things like this in the past where it could just be a false buying signal for the long run, and the bears are still fully ready to get in control of a longer-term sell-off, I believe to be wave 3 in the next bear market. That being another video, another time from now, we still have a very strong case moving forward, and I don't want to be thrown off by 2 strong days in the S&P 500's performance. Nothing can go straight down, nothing can go straight up, and I fully expect a turnaround to close the week. Let's just take a quick look at the VIX daily charts to support why I think that it is time for SPY to actually push back red to close the week. So as we can see here, dating back to last July, this is the future for the volatility index / VIX. We've had a super strong channel forming on the VIX, super strong, and we've had about we're on the 6th tag of it right now, and 3 times when we tag the support level that we're at, we actually gap up the nights following. That being said, I don't think we're going to gap up per se, but what I need to see before this trading day ends, which is just a few minutes from now, is I need to see this candlestick on the daily chart close above this channel. If we close above the support line, again, closing price being huge, then we can very likely see a strong push up over the next couple of days. And we're looking at a very strong, very, very sizable room for growth. We're talking 22 to 25% over the next couple of days, and mind you, it happens quickly. So if you're looking to get in the volatility indexes, you have a great setup, right? You have a buy-in right here, you have a stop loss below this channel, and you have a target at this channel here, give or take your price range. So it looks like we're at a great setup for the volatility indexes to reverse. Keep in mind that the volatility indexes perform conversely to the market. So if the volatility indexes are ready to push up, the market is due to push down. I wouldn't be alarmed by that green candlestick on the SPY weekly charts. It's fully capable of closing the week red. There are still 3 trading days left this week, and the technical setup right now tells me that it's time to go long on VIX. We had a very strong push up at the end of the day. It didn't hold, though I do believe we're going to close above this channel And closing above this channel is the most significant part in getting in. So, even if we go back and test some of these candlesticks, what happens on these reversals typically is we'll push down with a very low price throughout the day, and then we'll have an intraday push up at the end, and we'll follow that with a gap up. So look out for it. If you want to wait for more confirmation of reversal, that's fully plausible. In terms of the MACD, we sort of have a bullish divergence developing. Not really. We didn't fully make the lower lows that we needed to make. But that being said, momentum still appears to be making higher highs. I know this line's curling down, but that doesn't mean it's not capable of curling back out. So keep an eye out for the volatility index. Keep an eye out for SPY to close the week with 3 strong days down. Again, if we close the week green, then I will consider the long-term bearish case. But in the meantime, long-term, nothing has changed. The technicals are still playing out relatively the same. So just keep your head up. Don't listen to all the noise. And remember, happy trading and keep your numbers up.